Hello there, traders. Welcome to the Markets in 3 with me, John, Senior Market Analyst here at Anzo Capital. What a day it was yesterday in the markets. We're going to digest everything that happened, some key support and resistance levels to watch for Euro, US dollar today, as well as the big market moving events coming up. So let's digest what happened yesterday. It was an insane day. There was if you aren't into forex fundamentals and you're not into looking at the market yesterday in terms of what drove the move, then I'm here to help, right? Because this was a very significant, and this is also something that could last for much longer. So if you think about it, the driver of yesterday could be a catalyst that leads to further opportunities. So let's explain what happened yesterday. So yesterday, we basically had a report come out that the US Treasury was doubling their spending to buy their own bonds, right? So this is very common. A central bank can buy their own bonds, usually to try and control the bond yields, right? And what happened instead was the US Treasury released that they were doubling the amount they were buying. And the reason was because no one was buying the bonds, right? So if no one's buying the bonds fall, what happens? The yield rises. That forces the central bank to hike interest rates. Now we've seen a reverse of that. We've seen them buy aggressively their own bonds to try and basically force those interest rates down, which is incredible to see. And one big thing about this as well is we have to also look at who are the biggest purchasers of US bonds. Well, it's usually Japan. Japan have not been buying US bonds, so the US had to step in themselves to do it. That's a big catalyst. That's a big thing we need to think about, because if bond yields are going to continue to fall, that is negative US dollars. And this is something we've been talking about for some time now. If I just go over to the majors and we have a little bit of an overview first, before I get stuck into anything else, you can see I've got a dollar yen short position on at the moment. And, I'm looking to continue looking to get short on this market, to be honest, because I think it's a good market to target. I'm actually targeting all the way down at the swing lows of the intervention here. So we'll talk about that in a little bit, but let's just go on to the US dollar index first. Obviously, US dollar index inverse of euro dollar anyway. So I think it's a good starting point for us, because the big driver of yesterday was the US dollar. And look what's happening. Now, ever since sort of early July, we've been thinking that the dollar weakness is going to come. And there was multiple different factors that you could look at to give you that support. The first thing that we talked about was the macro drivers, right? And this is something that if you are interested in Forex, you definitely should look at, right? If I go and bring up trading economics here, and we have a little look at the drivers of the US, right? This is something we've been talking about for ages. The dollar weakness has been coming. You can see that the GDP was getting lower, right? Unemployment rate is the only positive thing here, because non-farm payrolls have been dropping in the negative territory. Inflation rate has been coming in lower, right? Especially when we take a look at what happened with PPI last week, coming in, and even future expectations are lower. We even had a FOMC meeting minutes last night, which, it kind of showed us that most of the participants assessed that higher rates would likely be necessary if inflation didn't fall. And there was like no reaction on the release. It was a dud. And that is exactly what we've been talking about. No one cares what the FOMC is saying at the minute, because they don't provide forward guidance anymore. So the weight of what they're saying doesn't make sense to really kind of hold probability to it, because how can you trust what they say when they say they're not going to give forward guidance, yet they're going to let the bond market do what they want? Now we've seen the US Treasury step in. So we may actually see Federal Chair Walsh start walking back this forward guidance things, because I think he thinks that, oh, I'm going to let the bond market sort itself out. Yet, look what's happened to the US dollar. We're absolutely crushing lower. There are other things that we could look into as well. It's not just about the macro. So if you think, oh, I don't understand macro, that's absolutely fine. If I go to barchart.com and we take a look at the commitment of trader reports here, and we have a look at what's going on in terms of the currencies, let me just go to non-commercials, and we will go to currencies. And let's set up the summary report here. We could see that there was a huge long position on US dollars, right? Huge long positions. That is starting to unwind now. We're starting to see that move come in a lot lower. Market is trying to unwind this position. Why? Because of what's going on in the bond market, because what bond traders are pricing in. Remember, we went from potentially a 50 basis points rate hike coming, right? Okay, why is this not working? Maybe a little refresh might help. Correct this issue by navigating this page using your browser's backup button and returning. Okay, right, okay. So the CME Fed Watchdog doesn't want me on there. I'm exposing too much. It doesn't want me to show you the bond pricing. But basically, they were pricing in 50 basis points hike, right? And that has now dwindled to potentially even no hike in September's meeting, which is looking quite likely right now, unless inflation starts to turn. Now, this plays beautifully into Donald Trump's hand because that is exactly what he wants. He wants lower inflation. He wants a Federal Reserve that is cutting interest rates. That's why I believe he's trying to de-escalate the US-Iran war. He wants lower oil prices. Yesterday, he said oil prices will be lower once we come to an agreement. So he is still looking at oil price as a main catalyst, a main driver. This is all important because if you trade in FX, this is going to be what's driving FX for a while. Even gold, this is what's going to be driving gold for a while. Now, we can look at it then from a technical point of view, right? What is price doing? Well, look at the US dollar index. We're breaking into new lows. We're making new lows, right? I talked about this, the potential for price to break lower. Now it's breaking. Market could now continue to melt here, right? It could easily come back to the 97.75. Now, as a swing trader, we probably want to see a pullback first before we try and get into anything. But this this catalyst could provide real momentum. That's why I've gone short on US dollar yen, because US dollar yen is one of the biggest sort of proxies when it comes to looking at the US dollar yields moving lower. And if US yields move lower, let me just open up TradingView here and I'll show you. If they continue to drive lower, then the likelihood is that dollar yen in particular is going to drive lower as well. We can see gold has obviously rallied to the upside as well. But if we go take a look at the US 10-year yields, they have dropped. They've come from that 4.75%, which was a potential reversal point for us, up to that 4.8% kind of area. And the market is now coming lower. If this continues, if we see the market continue to drive these 10-year yields lower, a break at the 50 moving average, a move closer to 4.3%, that's going to be very bearish US dollars. We'll see that reflected as well in the 2-year yield. Now, the 2-year yield, wild day yesterday for 2-year yields. We actually reacted bullish to that news, and then it rejected. So if we continue to see, downside of US 2-year yields as well, this will also be bearish US dollars, bullish things like gold, bullish on things like, Euro US dollar and things like that. But I like the idea of potentially looking for this dollar yen short. I missed my initial entry, right? And I'll say I missed it. I was short 3 times through this area here, and I ended up taking a loss. I took a loss because I didn't want to hold through the weekend, for one, and 2, the market broke structure highs. So if I go to the hourly chart, the chart I was trading from, let me just go to period separator here. We're on Thursday today, and what happened was throughout the week, I was short basically on that break of that low. Market came up, came back down. I like the look of it again here, so I shorted. Actually shorted it when price got back up towards these highs here, got that rejection there. So I shorted again. Market then broke structure highs. That's not what I want to see if I am short, right? Now, my stop loss was above volume areas, so probably would have been okay. Like my stop loss was at like 159.80s, and this was the kind of barrier point looking left on the market profile, around about that 159.75 handle, and that proved to be the resistance in the end. And price did end up breaking lower significantly. So unfortunately for me, even though I was short around these areas, I did take myself out for a small loss, so that I didn't try and take full losses. But now market has dropped. I think this could be a good move here. I like the idea that the market is rejecting these previous swing highs here of yesterday. If we go take a look, let me see if I can add a market profile of yesterday's price action here, which I can. Here we go. You'll see it'll be like a double distribution day, right? Because we had distribution in the Asia session, we then and London, and then we had that breakdown after the news. Market then held this kind of area here. So you've got this kind of like low volume pocket around this area that can act as resistance. And we can see the price came up and has rejected it. So I have taken a short trade, looking for price to continue to the downside, looking for price to continue all the way down to intervention lows, to be honest. I could set my stop loss a little bit tighter here, because if price does break back into this zone, then the likelihood is that we're going to go see the other side of value, which is back up at 159. But I'm going to keep my stop loss where it is because I'm looking for bigger goals. I'm looking for the market to come all the way down into 156, which is my overall target for dollar yen downside. So yeah, in a short position right now, I would look to add into these positions. To be honest, if I was day trading this market, I would be looking at a continuation to the downside. I'd be looking at my 5 minute, 15 minute, looking for those breaks below the 50 moving averages as entry points. Like I said, I really like this rejection that happened up here at that 158.60s, something like that, 158.65s. This little low volume pocket there, really strong resistance at the moment. So if we see the catalyst of dollar weakness, we see the catalyst of this move here, then that is something to watch. Now let's go over to euro dollar then. I'm actually going to flip over to my euro dollar chart because this market just took off. It just took off yesterday. So let's break this down a little bit. You can see I've got my initial balance probability board here, right? So market conditions at the moment. So what this is basically doing is, if you see these lines on my chart here, they are the initial balance. And what that does, it monitors the first hour of trade, okay? And it puts a high and a low in there and a midpoint. And then it also gives me 3 standard deviations away, right? Now, what it's doing is giving me probabilities of what the day could be. So when you look at a very small initial balance zone, it means that there's more chance of a breakout and a rally. If we have a large initial balance zone, there's more chance of a choppy market or a range bound market. Okay, so today basically it's saying that the market condition is balanced, normal variation day 65%, chop 35%. So it's basically saying we could potentially break out and continue to the upside today, or we're looking at a market that's going to be a little bit more sort of on the choppy side than usual. Yesterday, it was a 75% chance of a breakout. And oh my God, was it a breakout? We broke out of that initial balance zone. Price came up, rejected it, or rejected the 116 level, which was a strong level of support, and then just took off to the upside. I was actually looking to buy it here, and I didn't take the trigger. And then the US Treasury came out and did what they did and drove price all the way higher. Because we have been long euro US dollar a couple times already. We took a swing trade down here at the 115.33 last week, profited from price moving higher to the 116 handle. So we were looking for those active euro dollar longs because I believed dollar weakness was in play, which it is. Now, if we look at the euro US dollar price today, it's continuing to push higher and is moving higher. So where's the kind of next stop for it really? Well, it's blowing through this low volume area, which I actually used yesterday as a short. So let me just kind of show you that. And this is a way that you can trade markets with not necessarily having to be on the right side of it all the time. So obviously the market exploded higher. I looked at my market profile of May all the way to June and noticed a low volume zone around about that 136 116.75 handle. So that to me was an area where price could pause before continuation, and it did. Market came up, double topped. I entered short, stop loss above the highs, waited for a move down. It was around about 20, I think it was about 20 pips in the end. That market fell. Let me have a look. 17 pips is what I got out of it. And that's something I look to try and do when the market has just exploded in one direction. It's got to take a breather at some point, right? Now it's taking a breather. But the next level of resistance is probably up now at this kind of 117.62 kind of handle, which is the value area high of the entire downward trend that we had, right? So this area just through here. So that's 117.25. So that could be the point where price comes into and potentially, forms its next sort of rejection, because really speaking, this market could just continue to rise with that, interest. You could call it maybe a mini intervention, right, from the Treasury market. They're trying to protect the bonds, so they're not, going outrageously out of control. But yeah, this could be a nice area as support now. This kind of low volume pocket that developed, that area there could be looking nice as a support area going forward, in terms of if price rallies, hits the value area high, starts to kind of like consolidate and range, then the low here, or this level here of low volume, which is between sort of the 116.60 up to the 116.70, that could be our key support point, and that could be where price kind of finds those lows before breaking out and continuing to push to the upside here. So very, very nice move that we had. If we look at kind of yesterday in isolation, and we have a look at the key levels there, then obviously, the key levels are a lot lower than what we're looking for, because prices just took off. So it's going to be very interesting to try and find in an intraday level, because we're going to have to look at current day's price action. If price breaks out the initial balance highs and comes back, retests it, that could be a trade that we look for. Or if price comes and retests this Asia range here, round about like we talked about, that 116.75 handle, that could be an area where we see those longs continue. So let's keep an eye on that. If we're wrong, then price should break through that 116.75 and we should see a little bit more downside to price. So we'll keep an eye on that too. But I think any kind of major structural downside should be met with some buy-in today. I feel like the momentum is with that move to the upside. So that's what I wanted to talk about today, to be honest. I wanted to talk about euro, US dollar and the key levels. I wanted to talk about the news that happened, which was that buyback on the US Treasury market. We do have some geopolitical tensions going on at the moment. US President Trump has announced he is sweeping economic measures against Iran and threatening consequences for countries or entities supporting Tehran. He's also, Trump's going about it on a different way now. He's trying to get in and trying to, get some, instead of bombing them, he's trying to go for more of a economic situation instead. But we'll see how that one plays out. Doesn't seem to be impacting the dollar too much at the moment, especially after what happened today. Just looking at the market today, just to give you a little bit of an update of what's coming up this afternoon. We do have initial jobs claims coming out. So initial jobless claims coming out. Obviously, last time that grew. So, we saw a little bit more dollar downside on that. It is forecast to come in at 210K today. So if we do see a move to above 210, it says the maximum is 216. So if we see 216 or above, dollar weakness US dollar weakness is likely to continue there for some time. So let's see how this plays out today. Like I said, just to kind of give you a little bit of a roundup as well, I do have a new gold video out at the moment, so go and check that out. Just explains everything in detail of what happened yesterday. I am in a US dollar yen short position right now, looking to see if we can get that continuation to the downside. So thanks for joining me. Hope you enjoyed it. If you did, leave it a thumbs up, subscribe if you are new, and I'll speak to you soon.